As a digital asset investor or Web3 business owner, you know that the tax and accounting landscape is changing rapidly, and that rate of change is increasing on a monthly and yearly basis. It's important that you stay on top of the tax changes and that you apply these tax changes appropriately to your accounting and taxes. It's even more important that you have a software that's able to accommodate your needs due to the overall volume and complexity of the type of accounting that your portfolio and your business requires. In this video, we're going to go over the top issues that we commonly see with digital asset accounting softwares and what you can do to address these issues. So that's part one. I'm gonna get ready for the next part and you just cut that rather than doing video clips. If this doesn't work, let me know. We'll go back to the old. It just takes me a lot longer stopping all the clips, restarting everything. So let me know if this is an issue. The first issue that you can have when you're working in a cryptocurrency accounting software is missing data, and this can take the form of either missing wallets or exchanges or missing tax years that haven't been imported into the tax software. It's imperative for purposes of tracking your cost basis appropriately, which usually results in lowering your taxes, that we pick up every purchase and every cryptocurrency that you've ever received this income, because this all factors into your cost basis. So if we miss a wallet or we miss an exchange, or we don't start from the earliest tax year in which you've had trades, or if you're rolling your data over, we don't roll over the correct beginning cost basis from previous calculations, this is going to lead to data gaps. It's going to lead to unmatched cost basis, and it's going to lead to you overpaying in taxes. So it's very important to understand that none of these tax softwares are plug and play where you can blindly just plug in the data you have and expect to get an accurate output. We need to have a very systematic due diligence process that allows us to review all cost basis data, both on the gain or loss side, where that's going to trigger an immediate tax event for you, but also on your ending cost basis side to make sure that your ending positions aren't over or understated. Following these due diligence steps will ensure that we're capturing all of the data. Another issue that we see with cryptocurrency softwares is that they don't necessarily support all blockchains and or all exchanges that you may be using, particularly as we get into more obscure blockchains or blockchains or exchanges that have just come out more recently. It's less likely that most accounting softwares are going to accommodate these types of exchanges and blockchains with an API integration. In this case, what we have to do usually with these softwares is a CSV import. It's very important that we focus on obtaining the initial data from the best source possible, and that we format the data appropriately so we can get integrated with the digital asset accounting system that we're using. These steps are very important, since manual uploads, we need to really ensure that the data integrity is there and that the data is formatted appropriately so it's going to be able to integrate with our accounting system. Another issue that particularly Web3 businesses can have when they're choosing a digital asset accounting software is lack of integrations between other accounting softwares that they're using for their business. Usually, third-party, more traditional accounting softwares for your fiat transactions such as QuickBooks or Xero. Not all Web3 softwares are going to have the proper integrations that are going to automate what's happening on the digital asset side with your traditional accounting records. What we want to see done here is an automation of the journal entries that are going to have to be made manually if this process isn't properly integrated and automated. So that means your gain or loss transactions, your income transactions, your spending transactions, and your income, all of that's happening on the digital asset side that we're picking up in your digital asset subledger, that's going to need to get carried over into your traditional accounting system, like I said, usually via journal entries. There are softwares that can automate this process. Some can do it very accurately, automating the journal entries. Some, can have its own set of issues that need to be addressed, and some don't accommodate this at all. So this is a very important consideration if you're a Web3 business and you're choosing an accounting software. Another issue that is very common with cryptocurrency accounting softwares for both individuals and Web3 businesses is accounting softwares that don't support specific cryptocurrency assets, and also that, in this same type of issue may not deal with spam tokens correctly. This can lead to overstating your income and gains and losses in many cases, because there could be income that's coming in via an airdrop from a token that's a spam token and there's really no actual value because it's not saleable, or there could be income coming in from an airdrop, and because it's a new token, the software is not picking up the fair market value correctly, and it could potentially be overstating the income depending on your specific fact pattern. So we need to be very careful, regardless of the accounting software that we're using, that we review every asset for its overall tax treatment and the fair market value that's getting applied to it, particularly when we're dealing with more obscure assets. One issue where cryptocurrency tax softwares, regardless of their effectiveness, will not assist you is with legal gray areas in the tax code. There are many different types of transactions and scenarios that are out of the scope of this video that are not clear cut when it comes to tax considerations. This could be bankruptcy proceedings, treatment of certain types of transactions, the list goes on. In these scenarios, you need an experienced CPA or tax lawyer that's going to be able to help you navigate the overall fact pattern of the transactions and what are the overall tax consequences. You're going to need a professional to walk you through this and then take the appropriate steps to make sure that this tax position is reflected in the accounting within your tax software. So it's very important to make sure that we clarify this with the tax professional, and we're not just uploading our wallets into a tax software and taking whatever position that the tax software defaults to, because this can lead to nightmares in an audit. Many accounting softwares for cryptocurrency make it very challenging to handle both NFT and DeFi transactions. Now, the exact reasons why these transactions are difficult to manage within the tax software can vary depending on the specific type of protocol that we're discussing. But ultimately, there is a very common issue of the data that is in the Block Explorer not correctly coming through the accounting API for any given tax software. This can be due to the NFTs not having the right price associated with the purchase. Due to how the price is reported in the Block Explorer, it's not carrying through correctly via the accounting APIs. On the DeFi side, oftentimes the transactions are, especially when we're dealing with LPs, are going to be involving multiple assets. And usually when these are coming over in the accounting APIs, the assets and the exchanges that take place are actually not being converted correctly on the accounting software. So this can just lead to issues if you have a large amount of NFT transactions or a large amount of DeFi transactions. It's unlikely that you're going to be able to just drop this into a tax software and get an accurate capital gains calculation, income calculation, and cost basis calculation. And it's because the market values of the NFTs aren't going to be attracted, and the overall transaction on the DeFi side is not going to be categorized appropriately. So it's very important that due diligence is done on a protocol basis for every investment that you've made on the DeFi side, and likewise on the NFT side, we need to review every single NFT purchase to make sure that the right fair market value is applying to these. Additionally, many softwares, you may have transactions for NFTs or DeFis that are a taxable transaction that they just may be picking up as a transfer. So we just want to ensure that the overall taxability and structure of these transactions is going into the accounting software appropriately. And this is very common that this is going to require manual updates and after completing due diligence. So it's very important to understand that particularly NFT and DeFi transactions are not going to be plug and play into a software. It's going to require due diligence. It's going to require manual updates. Another issue with cryptocurrency softwares is lack of proper cost basis tracking. Now, this can take place due to various types of inaccuracies with different transactions, or the fact that maybe you're rolling your accounting over from another software and you're not starting with your correct ending positions from the previous software. If your cost basis data isn't accurate, this is going to lead to a wide array of issues. On the gain or loss side, if you're not bringing in cost basis for any assets that you've sold, this is going to lead to an unmatched cost basis, which is going to lead to a higher gain that you're going to have to claim on your taxes. Likewise, if you're not tracking your cost basis data appropriately and you understate it on your ending holdings in the subsequent year, whenever you sell these assets that we didn't pick up on the original cost basis tracking, you're then going to be overstating your gains and have to pay a larger tax liability. So it's very important that we do deep due diligence across your cost basis for every transaction where you're claiming to have cost basis, both on the gain or loss side and particularly on the ending balances side. I see many firms miss this due diligence check of taking an investor's or a company's ending digital asset holdings at the end of the year and then comparing this to their actual ending holdings at the end of the year. These two amounts should be congruent, and this should be a due diligence check that any experienced digital asset CPA is doing with you, because it confirms the integrity of the calculation and that cost basis data. So it's very important to do your due diligence when you're doing your cryptocurrency accounting and not just relying on the software. Are you experiencing bad customer support from your cryptocurrency and digital asset accounting software company? This is a very common problem that I hear from both investors and businesses, and it can cause a lot of stress because getting an accurate accounting of your digital asset transactions for the year is imperative to be able to file your taxes accurately and timely. One common issue that I see cryptocurrency investors and Web3 businesses have with their cryptocurrency accounting softwares is lack of customer support. This can cause serious stress because having accurate accounting records for your digital asset transactions is imperative to filing your taxes in an accurate and timely manner. Now, it can help if you're working with a CPA, a tax lawyer, an accountant, some type of experienced tax professional that can help you work through the issues within these softwares rather than relying on support that may not be responding within a reasonable period of time. So one thing that can help here is working directly with tax professionals, having someone on your side that's working through these detailed issues with you. But an issue that can arise ultimately is that if support needs to be contacted, some softwares are going to have better response times than others, and this can be a very important factor if we're coming up to a deadline and we're having an issue within a specific software. The last consideration for digital asset investors and Web3 businesses when choosing a cryptocurrency accounting software is its prices and features. Every software is trying to do the same thing, but they're all taking different approaches, and some have a higher quality approach than others in terms of the data we're able to import, the features that we're able to utilize to reconcile the transactions within any accounting system. And ultimately, the reporting that we provide, that can vary from software to software too, and some softwares provide better quality reporting than others. So there are many different variables at play where these softwares are not a one-size-fits-all, and as a result, many of these softwares can be priced differently. So it's very important where we have some cryptocurrency accounting softwares selling for hundreds of dollars and others selling for thousands of dollars, sometimes thousands of dollars a month. We need to make sure that we're choosing the right software that is going to accommodate your needs, but that we're also not going to overpay for features that you may not need for your portfolio or for your business. So determining exactly what your accounting needs are, and then going and using the correct software that is going to achieve what we need but is not going to overcharge us for that, is the key when we're picking an accounting software from a pricing perspective. If you're a digital asset investor or Web3 business owner that's looking for an experienced cryptocurrency CPA firm, look no further than Camuso CPA. Our firm has been in the digital asset accounting space since 2016. We were one of the first firms to start working with cryptocurrency investors and Web3 businesses. Whether it's digital asset accounting, traditional accounting, tax preparation, tax planning, or fractional CFO services, our team will be able to assist you and help you accomplish your accounting and tax needs from a digital asset perspective. If you'd like to speak with me further, reach out to me at camusocpa.com, and me and my team can schedule an initial consultation to discuss your needs in detail.